welcome back to another episode of the Accommodation Show. This week, I am joined by the wonderful Mr. Matt from My Broker Matt. Welcome to the show.
Glad to be here, Bart. Thanks for having me.
Well, I know that it's not My Broker Matt. You're from STR Legend, but they know you as My Broker Matt, right?
Absolutely.
Look, I've been looking forward to this because I've seen some of your content online. I think it's very strong. I like the way that you talk to people, not at people. It's kind of like you're with them on that journey, and you're sharing your journey as you build your business and your coaching business as well. So I love the way that you approach the content that you're making. That's why I reached out to you. I was like, oh, let's have a chat with Matt and see what he's got to offer and what his story is. And one of the things that I learned was that your story is fascinating because you've come from a traditional real estate background and then been looking at short-term rentals as a vehicle for investment, for generating wealth, and providing great experiences for people. So we had a bit of a chat, and then we've got here today. So I'm really looking forward to the conversation. I'm looking forward to sharing some of your knowledge and some of your background so that people can learn about different ways of potentially getting into short-term rentals. So look, thanks for coming on. I think it's the first point.
Yeah, thank you so much for having me, Bart. I've been watching you too for the last couple of years. I only started going to the conferences and really paying attention about 2.5 years ago, and your name has come up a lot. So it's an honor to be here, and even more so, I really appreciate that shout out. What we've been doing with our own portfolio and our clients, and now our coaching clients. It's been a major evolution, and I think that just the way we break it down, and having had the experience and history with building the portfolio we did over the last 8 years, I think it's been really helpful to kind of deciphering the code and the secrets of this thing that seems so tough to do. And it doesn't have to be. I just think people need a little bit more experience, a little bit more thought behind it, and I appreciate that you've noticed that in our social media. That's what we're here to share today.
Yeah, look, and it's no mean feat to one, build a company, two, to get yourself out there and to start to do all the content. One of the comments that I had for you last time was, I love the background of the setup that you have. I think it looks really good, and that's something that I'm going to borrow from. And I think that's the key, folks, is that when we're learning, it's good to kind of just copy people that are doing something really well. And I'm watching Matt. I'm like, this is really cool. This is really amazing. So there's bits that I'm gonna copy or borrow, or however you want to phrase it, to elevate the level of my podcast and my business. I think that's something you've probably done in the past as well, is by taking all the things that you've learned and then implementing in your content, but also in your business as well.
Absolutely. Yeah, we're all borrowing and trying to learn from each other. And the better we get at implementing those changes, the better our business will be. And it's great what you're doing. Like the sheer level of experience you've created with your podcast. I think you said it, like you're done over 200 episodes now. I don't know a lot of people that have even broken 50. So kudos to you, and the experience that you have, and even what we've seen in just your setup and how you set us up to be successful on these calls. I think that's really a hat tip moment. So well done, sir.
Thank you. Hey, look, what's fascinating is those relationships. I actually just recently celebrated my birthday.
Happy birthday again.
Thank you. My parents were over, and then my mum she says, "Oh, have you seen the hotel guy from New Zealand? Have you seen him recently?" I'm like, "No, I haven't." So she was talking about a chap called Les Morgan. And Les Morgan runs, I think they've got like $500 million worth of hotels under management in New Zealand. And he put us up in his hotel a few years ago. And he's one of the people that I'm really keen to get back on the Accommodation Show to learn from him. And he really enjoyed being on the show. And it's one of those things, it's like we elevate by surrounding ourselves with people that just know more than us. And I'll be the first one to say, I don't know anywhere near as much as a lot of other people know on their subject matter. And today that's what we're doing, subject matter. And when we talk about expert as well, I really that term is really hard because what you self-qualify to be an expert. How do you become an expert? But for me, it's finding people that have done it and hearing their stories. So I'm not having you here because Matt's the expert. It's like, no, Matt's got a really cool story. about success and how he's done it. And maybe there's something that we can learn in our businesses. So today we're going to be talking about basically buying property to then put it into STR, because there's different business models that we can have when we get into short-term rentals. The top three: property management or co-hosting. So when you have someone that has a property and then you help them manage it. So then you're looking after the cleaners, you're looking after the guest check-in, you're looking after bookings, and then you're basically kind of a partner on that. Kind of like a real estate agent, but instead of long-term rental, you're doing it for short-term rental. The second one is arbitrage. So arbitrage is when you're taking a lease over and then you're using that to do short-term rentals. And then the third one, which is one of the probably the most difficult ones that I haven't met that many people doing it and doing it successfully, is actually buying the property to then put it on STR. So first question. Oh, so let's actually, before we actually go into the topic, Matt, do you want to give us a quick background as to how you got to where you are today?
Yeah, I'll try and be quick. It's part of this started at childhood, man. I had my uncle was big on cash flow quadrant. I actually played the game as like a 10-year-old. He always tell me
Okay.
about get rentals, things like that. Coincidentally, he never ended up getting rentals. So take this as lesson number one of this call: don't talk about it for decades and not do it. Right? It's a really painful thing, because fast forward 25 years later, we had breakfast a handful of years ago. He goes, whatever made you want to get into rentals? I was like, well, you always put it in my brain as a kid. And he's like, he looked back and just was like, man, I kept talking about it for years and I didn't do it. That was a really big moment for us. But since then he's also one of my favorited uncles, so he gets extra treats and benefits all the time. Um, but that being said, as a kid, we grew up pretty rough actually. We're from Detroit. We went on welfare robberies. That was kind of our thing. It
Mm.
was not an enjoyable thing, but it taught us grit, right? And amongst that, as we kind of got into the high school years, I was starting to come into my own, starting to realize some things aren't the way I want. And I could tell there's another life I want to live, but luck, as it would have it, was not really on our side. So we kind of were trying to figure out, like, is it okay to want more? And I kept telling myself no. Our family was kind of said, hey, this is what we deserve. Let's be thankful. We're generally a religious family. And I always felt conflicted by that, not to offend anybody, but I felt conflict. And as we got into the college years, I got into a really bad car accident. The gap insurance didn't pay out, so I had to start riding a bike to work until while I was waiting for the gap insurance to work out. Showed up soaking wet one rainy day and got fired. And then I was pretty much homeless at that point. Had to move into a friend's house and rent a couch. And I couldn't even afford that. It was just 200 a month, and I couldn't even afford that for the first 2 months. So I had to get back on my feet. So what I want to pose on you guys is, unassumingly, I've been there. There's not many people, it doesn't, you don't have to start off tough or hard or anything to be successful. But I'm saying you can start off low, tough. You can not have any believe in yourself, not have the right community, but you can get there. That's one thing. That's my second lesson today. Like, you can get there. And sometimes there's always somebody in your corner that's egging you on to do it. But for some reason, it's only you that's really holding you back. And it's hard to see that in the moment. So that's how it kind of started. Right after wrapping up college, I finished up with 2 degrees, medical sciences and finances at U of M. And I decided, you know what, I kind of want to go the medical route, but I don't want to wait another year. It turned out some of the requirements to get into med school had changed. So I was like, I'm just going to go do finance. Got a job at Quicken Loans, making $36,000, $38,000 a year. Felt pretty broke, but I was pretty excited because I finally have a salary. And immediately in the first couple of months, I made friends with a senior underwriter. I was a junior underwriter. And at that point, she told me, hey, you're pretty sharp. You ask really good questions. I think if you're really focused hard, you can become a senior underwriter like me. And I was like, well, if you don't mind, what do you make? She was like, we do well. I'm like, what's that? She's like, 150 a year. And to me, that's like adding 100,000 to what I was already making. I was like, you're kidding me. There's no way. She's like, yeah. She's like, I actually think you're smart enough to do it. Like, if you want to, I'll help you get there. And so I went home and it rattled me. And this was one of my first moments where I realized maybe I had it this whole time. And maybe I just needed somebody that believed in me and could help me actually follow a path. And that's what we did. And within 6 months, I had made my first month of $8,300 a month, which is the path to 100,000. So it was that moment that I started believing myself, and it kind of changed everything because I was working as an underwriter. I'm reviewing everybody's financials,
Mm.
trying to assess, give like a risk assessment of whether or not we should lend them a loan to get a mortgage on a property. Saw all these people with all these rentals, so many people making six figures in this world. And all of that was just an unlock moment for me too, because I didn't realize how much wealth there was in the world. I had grown up with so little that I couldn't even imagine that almost everybody trying to get a house had six-figure incomes, $200,000 incomes, $300,000 incomes. I had no idea. It was just ignorance, unawareness, and I wasn't seeking it out. So there's all these issues that I was like starting to uncover about myself and why I haven't gotten where I wanted to go. And then almost all of them seem to have rentals. And I'm like, okay, look at all these people with all these rentals. Look at all this money and how many write-offs they're getting. As I kept looking at that, I was asking them for more documentation to approve their loans. And I would notice that when I talked to them on the phone or an email, they didn't seem that sharp. And I'm sitting here like, wait a minute, these guys have money, they have rentals, and I'm pretty sure I'm smarter than them. And guys, let me tell you, I don't think I was pretty much a C plus student forever. I'm not like a genius at all. I'm a C plus student, but I'm a really hard worker. And I was like, okay, these guys suck at communication on the phone, suck at written email. They have no punctuation and they're making significant money. I can do this. I got to start believing in myself that I can do this. So I finally worked on getting my first rental, a long-term rental. And I was worried it was going to burn me. I was worried I was going to lose, and I didn't. I did well.
Mm.
I got a partner on that one, and we both did well. We said maybe we could do it again. Got a second one. We're like, hope it doesn't burn us. Huh. We were smart about it. We were tactful. Didn't burn us. So now we've established two in a row. And now we're like, man, if we can do one more, we can prove we can follow a pattern. Third one works out. And at that point, I got to tell you, after three, like your confidence, everything changes. Before you knew it, I was at 10 owned properties. Fast forward to today, we have 51. And I can tell you from probably 12 to 50, I can hardly remember like what happened in between that. That's how fast it can go once you get on a roll. And I apologize. This isn't to be like sounding like arrogant or braggadocious, but I'm trying to relay a thought that I came from nothing. I really thought that it would be harder than it had to be, harder than I could handle, and something I couldn't like eventually get to be able to manage and do correctly. Turns out I could do all of that. And I've had, yeah, not everything was a perfect win, but probably 95% of our purchases have worked out. And with that kind of track record, now we've gotten to the point where we're starting to teach that. And I guess fast forward, amongst all of these things, we made ancillary businesses. We decided to make a real estate brokerage because I didn't like the agents that were helping investors buy. I didn't feel like they cared enough. And I didn't feel like they knew what to look for. So I said, I'm going to make my own. I'm going to make sure I teach it the way I want it to be taught. I didn't feel like there was a mortgage brokerage that was short-term rental friendly when I was trying to get short-term rentals. So I said, let's make one. We made one. Then people were like, hey, I want you to help us property manage and, co-host. And I said, we don't want to do that. And they said, we really need your help. Because there was a need and I couldn't trust to hand off that business to anyone else, we made our own because we knew we would do a good job. And at that point, we grew. So now, fast forward, well, I'm sorry for saying fast forward so much, but at this point, we have 36 co-host clients. We own 51 properties, 31 are STRs, and we've been quite busy. We started doing midterm rentals this last year, and those are working out pretty nicely. And we've got a really good wide range of what we can do and many ways we can help people. So that's what we've been doing, and hopefully that's what people are getting from our social at this point.
That's amazing. There's just so many little stories and so many tidbits that come out of that. Uh, One of the key threads that I'm hearing from what you said is someone gave you the confidence to first look outside of yourself and say, hey, you can probably do this. If we can do it, then you can probably do it. And as you were learning and as you were growing, you were like, oh my gosh, if other people who might not have as many skills as you can achieve that success, there's no reason why you can't. It reminds me of a story. I used to, one of my first jobs was selling a Vitamix blender. So we used
I
to go
remember that.
around traveling all around the world. So I did all over Canada, the UK, and we used to set up at trade shows, a
Hmm.
big booth, and present in front of well nobody, and then you try to get one person, and then you get 100 people all looking at you,
Hmm.
and we were so then selling these blenders, and I remember we recruited a really young guy, but very very confident, and he was younger than me, but I trained him up and had him up and running, and he started outperforming me, and I was like, oh god, this kind of sucks, right? I'm meant to be the senior here, and after work you'd go to the pub and then you'd have a drink and have some food and sort of just chill out before the next day before you have to work again. And we kind of got into a bit of a philosophical debate, and he was really harsh with me. He's like, dude, what is it that sets you apart from one of the top performers in the company? Why can't you be as good as them? And it's like, well, is it your use intelligence? And I'm like, oh yeah, I think I'm as intelligent as them. Is it the looks? I'm like, well, probably not. I don't think that they're particularly attractive or anything like that. And it was kind of through that conversation that I learned that there's nothing that really, like education can make a big difference, of course, but there's nothing your dream or what you want in the future can be determined by yourself. And if someone else has already achieved it, there's no reason why you can't go and aim for the same sort of thing.
Oh yeah,
So that
I
was
like
that
that.
was yeah, that was my little learning. And that's I think that from what I'm hearing is the same thing, is that you had people that were doing stuff like, well, I could do the same thing, and that kind of set you on your path to then trying to emulate and trying to achieve and that sort of thing. Now, let's get back to we're running through the episode very quickly, so let's get back to the philosophical idea of um, buying rather than potentially. Oh no, so actually, the philosophical idea is using your properties for short-term rentals rather than long-term real estate. What was the thinking there?
Short versus long term.
Yeah, like because I mean, you could go into traditional real estate, right, and just
Yeah.
rented out places for people to live in.
Yep. Yep. So when we were doing long term rentals, I'm sure pretty much anybody listening to this call has thought about that or did do that. And we all thought, hopefully I can make $100 to $300 a month and, you know, make some money on this. Maybe you're lucky you're doing 300 to 500 at his range. Let's just call it 300 for easy, easy numbers, right? And you go, the next number you go is, I got to get 10 of these. So I'm making $3,000 a month, 10 acquisitions, possibly with rehabs. It's a lot. It's a lot of work. I've done it. I did that and it got me going. It started a base. But the issue is, at this point, short-term and midterm rentals are a real thing. They're a very viable product, and if you can do 2,500 net in a month off of one short-term or midterm rental, that's pretty much 1 versus 10, isn't it? Like
Yeah.
even if it's 1 versus 8 to 10, that's a way better ratio and higher payout. And I think that on top, the crazy part is you get way more tax write-off capabilities once you're doing furnished rentals. That's the other thing that's pretty wild. And typically when you're buying shorter midterms, you're on average buying a higher value asset. So that also means, presuming the same level of appreciation no matter what area you're in, you're probably earning a higher per dollar return on your asset as well, just by having bought a more valuable asset. So I think there's a lot of additional benefits that come along with that. And then there's other, like, kind of intrinsic benefits, right? You have that much less to manage in terms of how many units and how many sets of bills to pay. And I got to tell you, at 51 properties, I don't want to have this many properties anymore, because especially when the majority are all short terms, you got your gas, your electric, your water, your internet. If you have cable, few other things. Maybe you have pool cleaning companies, cleaners, hot tub cleaners. It could be, there's so many things that could stack up. So one of the things that we're doing is we're kind of shifting our portfolio. We're going to get rid of some of our lower performers and then size up is what we're trying to work on. But I'm sorry, getting back to the topic, short versus long. These are the reasons why you would want to do that. Short term can just net more money and be. Some people feel like it might be more headache, and yeah, there's more conversation per day. There's no question, but that can be automated. That could be farmed out to a VA, and And if nothing else, it's like for your first couple, it's at bats to understand the communication, how to really run your systems better to make sure they're having a great experience, so you can choose to scale successfully.
Yeah, yeah. Look, 100%. Look, I don't disagree. I think that the other thing that's really interesting is over the past. I mean, the OTAs have created an opportunity, right? So now you've got a guest base that you can tap into, and technology has accelerated so fast, and now it's actually manageable. I would argue, however, though, that from a management point of view, like if you've got a long-term tenant, you can pop them in there for a year or two, and yes, there's different parts that you have are responsible for to those tenants, but you're not having a guest check in every a few times a week. You don't have cleaners that you have to manage. You don't have to look after the toilet paper and
True.
the guest experience and the brand, and so it's a lot more complex of a business rather than doing the long-term stuff. What are your thoughts?
Well, you're not wrong. I, with my long-term tenants, I probably hear from them once every 3 to 6 months. Maybe there's a little repair to do. But frankly, it's the most unexciting part of my portfolio. I'm bored by it. I don't care to make sure I'm paying the property taxes and insurance anymore. I'd much rather focus on high net properties. If I'm going to have this scale of properties, I want them to make more dollars per unit owned. That's what I'm trying to work on right now. I know starting off, it sounds like maybe tedious to get to, you know, handling the toilet paper and the supplies and all of that. I'm sure that's the case. And for some people that never want to deal with that, you have two options. You can either hire that management side out. That's something a lot of co-host property managers have emerged that are able to do that, and they can do it very well at this point. There's a lot of support tech and support services at this point that are also rising. Like, so you can still be the main manager of your property, but you can have support services that really kind of take some of that heavy lift off. And again, you can hire and train a VA. So there's all these ways you can do that. You can recruit your spouse, which is kind of what I did. And now she's created a multi six figure business because she's the queen of co-hosting in Michigan. So
Yeah,
that's what we've done.
yeah.
And I do think that, I've worked with a lot of partners and previous landlords of long terms, and I'll tell you this: it's like a very addictive drug. Once you get that, a lot of them have converted long term rentals into short terms, and they're making 3 to 6x of net profit. And they're like, hard to go back now. And once they see that, you can't not wonder what would happen if I had 5 to 10 of these.
Yeah,
So
yeah.
if you scale in that direction and you're making 3 to 6x, maybe 10x, depends on what you're doing, hard not to.
Yeah, and what's interesting actually is that the market for short-term rentals has changed a fair bit. So, where you look at sort of that traditional long-term rentals generally aren't also suitable for short-term rentals, right? The locations that you're actually choosing, the type of property, how much it costs, how old it is, how things are put together, how much maintenance is going to be, and that sort of stuff, whether people can get in. Quite often they don't match. So a lot of people, like you said, they're actually kind of the ones that we more suitable for long term are kind of getting put back into that market. And then there's sort of like a different class of property, which is the higher value one, which is exactly what you said. So it's not kind of affordable housing that you're taking away by putting into short term rentals. It's quite a distinct product set, right?
For the most part, yes. There are some variations that have worked. I wouldn't say, the first time home buyer range of properties, things that are quite affordable for somebody just coming out of college or just trying to buy their first house. Um, you can still do short and midterm rentals in those areas. I do some in some very dense metro areas,
Yeah.
and they do well. They do well. I personally classify short term rentals as things that are usually inner city or close by. Then vacation rentals being something that has some
Mm.
type of amenity like skiing, snowboarding, lake access, beach access, something like that. And I think that short can be synonymous with that as well. But short is typically when I'm talking about it, I'm meaning something near a major city hub, near a lot of hospitals, airports, things like that.
Yeah.
I tend to still aim for houses that have good school systems in case we need to default to long or midterm rentals.
Mm.
So while it's true, like Detroit, that's our major metro. We do have a couple in Detroit, but they're in areas that are like they're still near the sports arenas, things like that. But there are parts that maybe you wouldn't want to be in, and if you don't feel like getting out of your car on that street, maybe that's not the place for a short-term rental. So to that point, yes, that's probably not the case, because you'll see that come back to you in the reviews. If you're picking areas that are less ideal, and you're charging a price point that doesn't really match, you're going to get those reviews. Now, I have people, to the point of what you're saying, that only pick really low income areas, and they make a lot of money. The reviews are terrible, but they make a lot of money. So I've seen short-term, mid-term rentals be exploited in, super rich and affluent areas, as well as like very challenged areas. So can you make money in either market? Yeah, you can. Maybe that sounds crazy to people, but you'd be surprised what happens when you try a few things.
Yeah. So then, let's continue down this journey. So let's say we're starting on this journey, and we're like, okay, cool. So not only I want to get into sort of real estate, because we're getting into real estate now, right? So looking at
Mm-hmm.
properties, we're not just thinking about short-term rentals. We've got to think about acquiring property. We've got to think about loans, mortgages. We've got to think about equity. We've got to think about having a deposit and that sort of thing. For a lot of people, even kind of starting that journey and knowing and going, oh, I'll never be able to afford a place. Now, over here in Australia right now, it's very, very, very hard to buy a place that's not in the middle of nowhere. And the price of everything's gone up through the roof. And I think that around the world, that's happening everywhere, where property is just getting more expensive. So your barrier to entry is a lot higher. And then the second part of the question is scaling as well. So, all good and well to get one property. If you can get it to appreciate over 12 to 24 months and draw on that equity to then go again, great. But if things are flatlined, or if property goes into negative equity, if things do slow down, then we're in a little bit of trouble. Double barreled question, but one, getting into it, two, scaling. So then maybe let's do the getting into it, and then we can do scaling after.
So the biggest thing at this point is you have to understand how to analyze and underwrite it. The real goal here, a lot of people have heard this, the key performance indicator, KPI, cash on cash, COC. Um, it's a great metric. It measures effectively how much cash you put in a deal versus how much you get out. That's the basic idea behind that. And cash on cash has been a great metric. A lot of people will say 20 to 30% is good in the short term rental space. Generally a true thing. But I think almost more importantly for people these days is they need a high cash flow. The net cash flow has to be high. Um, the thing about cash on cash is you can have a metric that actually hits 70% cash on cash. But if you're only making $300 a month for the amount of work that you're putting into it, is that worth it? For me, it wouldn't be. So for what my students and what a lot of people that are buying with me want to do, sorry about that. For what my students are doing, and for what a lot of people that want to buy with me do, is they focus on a combination of those metrics. We want to see that we're making at least $2,500 a month in net cash flow. And hopefully that cash on cash metric is still north of 20%, preferably 30 plus. So when you're looking at that combination, you're going to be buying probably a better asset, and presumably we're going over the method that we're going to use. Like there's a few things you can do when you're looking at comparable data. You can look at whatever's in the area, and you can see how you can match or meet some of the similar amenities and design styles. But the key is two things: the enemy method and what I call the negative space method. I don't think anybody really talks about that, but it can be inferred. The enemy method is, how do you beat somebody? Like, let's say you see somebody uh, that has you see a property that's a 2 bed 1 bath, and there's nothing special about it, and now you can go buy a 3 bed 2 bath. You can pretty much monopolize over and above what the 2-1 is. You can sleep more, they can go to the bathroom a little bit easier, they can wash up. Then that's the thing that would make it better. You've improved on what is currently there. Now let's say there's another 3-2 that already exists, 3 bed 2 bath. You're looking at a 3 bed 2 bath. How can you be better? What kind of amenities do they have? Do they have a game room? Do they have um, a electric car charging station? Do they have hot tub, pool, any of that? Now, if you can add that, or you can buy something with those things, then it's an improvement. You're beating the enemy out. That's all that concept says. Now, let's say all the data in the area has nothing bigger than a 3-2. But you see a property that's a 5-bed, 3-bath. This is massive in comparison with anything else. You're like, there's nothing to support the data that this would make. You can probably surmise it'll make at least the same amount as the best 3-bed, 2-bath.
Mm,
But how do you reverse engineer that? Because this is, you're looking at the negative space. You're looking at, there's an area, there's a market that's unserved. How do I serve it? And what is my potential win on that? So that's something that we kind of teach in our course. It's, I don't want to get too nitty gritty on this. I know I probably already have, but with all that, when you are searching out for the right property to buy, I want you to be completely focused on that, because a lot of coaches right now, they're saying, here's my story. Here's why you want to learn from me. And they go, here's how good of a designer I am. Here's how good of a property manager I am. Here's how, um, here's how good of a cleaning team I established. Here's how great of a contracting team I've established. But you know what they're not all saying? Here's how smart I bought, and here's how I buy smart every time.
mm,
You design poorly, you can fix it. You get a
yeah.
bad cleaner, you can swap it. You got a bad contractor, you can swap it. If you're not great at managing it, you can still hand it off or go learn how to be better.
Mm.
You got a bad property to begin with, you're screwed.
Yeah, absolutely.
So,
Yeah, because it ties up all your cash flow, right? And
yep.
you've got no opportunity to then grow, and you're in a lot of trouble at that point. So then, so we are saying though that to get in, one is you need to have some sort of a job to be able to. So that when you get the finance, so that then they can see how much you can borrow, so your borrowing capacity, and also you need some sort of a deposit to get yourself going.
So yeah, I can go back into that. So I did I was hitting on how to even decide whether or not you want to buy a property. That was kind of that first part, and which property to buy. Now, when it comes to the actual function of that, and this is going to vary country to country. I believe in the Philippines, you can't even get a mortgage after you're 30, so that's kind of like a crazy little factoid. But when it comes to getting financed, yes, you definitely want to have like a decent credit score. You want to have some assets, some kind of capital built up, because that's going to go to pay for your down payment and your earnest money deposit (EMD) for short, your deposit money on the contract. And you need to find a lender or mortgage company that will lend to you on the asset, and they're going to check out your capacity as well as whether or not they want to lend on that asset, the
Yeah, of
property.
course.
And sometimes they're going to look at what they expect the appraisal value to, well, what the appraisal comes in to validate what the home is worth, to make sure they're not lending more than what it's worth. That's one of the big things that they use as a check and balance. But there's other loan types out there that many people don't understand. There's portfolio lending, debt service ratio lending. There's bank statement loans, a few other things that some people have tried. Fix and flip loans, you name it. So, but if you don't know how to like set yourself up with the right lending vehicle, it's going to be really hard to scale. So, but the gist of all of this is your financials have to match, have to be like using kind of American logic or American assessments. Typically, you have to be over 620 FICO. Typically, you're going to want to have for your first purchase probably 10 to 15% of the purchase price saved up as in your bank statement. That's going to be your down payment. You need to be able to deploy usually 1% rounded to the nearest $500 amount for the earnest money deposit. First things you do is you get a pre-approval with your lender, and from there, once you're making an offer with an agent or broker, and it gets accepted, that's when you deploy the deposit money. From there, you do an inspection. You do a checkup with a private home inspector to make sure you believe the house is in good shape. They've checked all the things that maybe you don't know how to check: roof, electrical, plumbing, things like that, foundation. If you approve after that, you can move to the appraisal. That's when the lender goes, okay, we want to see if we still think it's worth lending on. And then there's the clear to close time, where you sent in all your documents to validate you have the income, you have the assets, you have your credit worthy, and then you get the keys. Now, then you have your first business that you have to set up. That's when it gets even crazier. So that's kind of the general process that you'd be looking at.
Okay. And look, for all of that stuff, I think we're not going to touch on that today. That sort of operational stuff, because we've got lots of content around that, and there's lots of different ways to set yourself up and get yourself going. That part of getting started is really important, and I think that people need to understand that. And it's quite interesting as well, because you're building a lot more depth to your personal wealth, right? Like
Oh
in
yeah.
the future, and you have to analyze this very, very well. You need the right financial advisors, you need the right people around you to make it happen. But once it does happen, and once you start to unlock it, that you can do quite a fair bit. And you just started touching on scaling as well. That if you don't set it up correctly in the first place, that scaling becomes nigh on impossible, right?
Yes, it's very tough. There's a lot of fixing to do. But simultaneously, I think a lot of people talk themselves out of even getting started to scale before they even have a chance. So,
Yeah.
it's sometimes it's better to just strong arm it than nothing. But with the right education and support, you can do it way more efficiently with a lot less headache.
Yeah, absolutely. Cool. Look, we've kind of almost run out of time. Time flies when you're having fun. And look, I like your story. I like the idea of getting into the industry in different ways. It's
Mhm.
very, very clear that you've got a huge amount of experience in this space in terms of getting mortgages and that sort of thing. So, folks, if you do want to find Matt, what's the best way?
You can reach out to me in Instagram, my broker Matt, all one word.
There you go. Nice and easy. So find him on Instagram, then you'll find all the different links to the different bits and pieces that he's doing. Folks, Matt, first of all, I want to say thank you for taking the time, for coming on and having a bit of a chat about your story and your journey. I think that for me, I've really learned that with the right determination, you can learn the skills that you need to then be successful. I congratulate you on getting up to the 51 properties. I'm sure that was no mean feat. I don't know how old you are, but I'm going to guess you're probably a tiny bit younger than me, and I think you're doing pretty well. So well done. Maybe a bit older. I don't think you are. I think you're younger. But anyway, I digress. Um, so congratulations on that. I'm really looking forward to following your journey and seeing how it stacks up and compares to everybody else out there and how they're running their businesses. I'm also looking forward to hopefully getting involved in your stuff so that I can bring some book direct websites to your clients and build some brands as well.
I'd
Apart
like,
from
yeah.
that, is there any final thoughts or any final words, or are we good to go?
Honestly, I want to thank you again for having me on, and for people that are, looking to get more education on how to identify the right properties and actually want to be connected to the right properties, and then learn scale. That's the best thing that we can do with what we are teaching with our coaching. It's called STR Legend, and when you go to pretty much any of our social media, you'll see a link in our bio, and you can get access to our free mini course. We have a 3-day mini course that's for free. Just check that out, gives you a lot of insight into what we teach and why we teach it. And hopefully, if it helps you, maybe you'll want to join the full thing. So, thank you again,
Beautiful.
Bart. I really appreciate it. And cheers to everybody listening.
Thank you so much. And look, folks, if you are tuned into this, then make sure that you like and subscribe. Most of our listeners actually came in 2023. So if you are one of those listeners, make sure that you hit the little subscribe and all that kind of stuff. It does make an absolute difference. I know that every single podcast that you listen to will say exactly the same thing, but it does enable me to get great guests on and to continue the work that we are doing to find cool people to talk to and to hear their stories and their journeys, and hopefully everyone can learn something along the way. Thanks so much, Matt. I really appreciate you, and wish you a great rest of the day.
Same to you, Bart. Take care, brother.
Take care. Sweet. Done, done, done. Cool. Went fast.
Yeah. Thank you.